Welcome to Bauhaus Weekly Wrap-Up, Week 35. Week 35 was a roller coaster for markets. Jobs stumbled, the Fed loomed larger, oil slid, and gold gleamed while trade tensions escalated. For everyday households, that means tighter paychecks, shifting loan costs, and rising risks at the checkout line. But don't lose sight. Opportunities still shine through the noise. Let's dive in. Economy. Weak jobs signal Fed action. The U.S. economy showed strain in August as non-farm payrolls added just 22,000 jobs, far below the 75,000 expected. Unemployment rose to 4.3%, a four-year high that signaled a cooling labor market. Investors quickly priced in Fed action, with rate cut odds on September 18th jumping to 90% for 25 basis points and 10% for 50. Yields fell to 3.6%, while the S&P 500 slipped 0.5%. For households, slower hiring could mean $100 to $200 less in monthly wage growth, though lower borrowing costs, mortgages now near 6.5%, may soften the blow. Confidence in the data remains shaky after Trump's firing of the BLS chief on August 1st. Commodities, oil falls, gold climbs. Oil markets weakened after OPEC Plus outlined a planned 127,000 barrel per day hike for October, though no final deal was struck as the UAE pushed back. WTI fell 2.5% to $61.87, while Brent slipped just over 2% to $65.50. For consumers, cheaper crude could bring gas down from about $2.15 to $2 a gallon, saving $10 to $20 a month, though energy stocks slid 2%. Meanwhile, gold climbed to $3,475 an ounce on expectations of Fed cuts, underscoring its safe haven appeal. Tech, AI gains meet tariff risks. Technology stocks highlighted the tension between innovation and political risk. Broadcom jumped 15% on a $10 billion chip deal with OpenAI, while Meta drew attention with a $250 million AI hire. Yet optimism was capped by Trump's Section 301 probe into European fines on Google and Apple, alongside tariff threats averaging 10.5% that could climb near 20%. Higher duties would likely lift chip and device prices by 10 to 20%, adding $50 to $100 to the cost of phones and laptops. AI momentum continues to drive valuations, but with the sector trading above 35 times earnings, a 5 to 10% pullback is possible. Macro finance, trade tensions escalate. Trade tensions intensified as Trump's Section 301 probe targeted EU fines on U.S. tech firms, while Japan's $550 billion U.S. investment now faces a 45-day tariff deadline. At the same time, China's drilling in Taiwan's waters stoked fresh supply chain worries. Tariffs, projected at 10.5% and possibly rising toward 19.5%, could lift household costs by $50 to $100 a month across groceries and electronics. Japan's investment may add up to 0.5% to U.S. GDP, but the yen has already weakened, with dollar-yen up 1%. The larger trend is deglobalization, with fractured supply chains pushing costs higher. October 14th's tariff appeal could spark further price spikes, especially in energy, while Asian geopolitical risks compound uncertainty heading into the Fed's September meeting. The bottom line: Week 35 brought a combination of weak U.S. job growth, falling oil prices, and escalating trade threats, leaving households potentially facing $50 to $150 in added monthly costs if tariffs rise. Markets are navigating a fragile balance between slowing growth and policy shifts, while commodities and technology remain volatile under the weight of geopolitical and economic risks. At Bauhaus, we break down these developments to simplify the noise, helping you anticipate changes with clarity and confidence. What's your strategy? Drop your insights in the comments below. And as always, stay sharp, stay curious, and above all, stay Bauhaus. Like, follow, and subscribe to our social media channels for more market insights and analysis.